Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment at the market site in Times Square, we have Phil Mackintosh, chief economist at Nasdaq. We're going to take a look at small cap performance in an interest rate environment, as well as how oil is participating to the rise in inflation. Phil, it's great to see you as always, and it's kind of counterintuitive. You have a rising interest rate environment, and small caps have actually been outperforming. So what are your thoughts on that? And then, of course, we have to talk about interest rates as well.
Yeah, I mean, it is interesting to see that small cap is doing pretty well with the rates starting to rise right now. And I think what that really shows is some of the things we've been talking about. The rally that we've seen the last 12 months has been so strongly tech stocks that benefited from COVID, benefited from work from home, and benefited from the low interest rates just expanding their multiples. And so as rates go up, those multiples start to come down, and it's the large cap tech. If we look at yesterday's sell-off, it was mostly the large cap tech stocks that pulled the index down.
And when we take a look about oil and its contribution to inflation, it seems to be the perfect storm right there between supply and demand and a number of other factors.
Yeah, it's a little bit of a worry. The fact that oil has obviously gone up about 10% in the last few days. It's not feeding into inflation yet, but it's got a lot of people worried because we were also worrying about the taper at the same time. And so if the taper starts to happen and puts a little bit of a headwind into stocks, and we see oil prices spike, that's going to put a headwind into the economic growth story as well. So yesterday we kind of had two reasons to be a little bit fearful about where the market's going.
A little bit of positive news, a slight improvement with COVID data.
I mean, really quite a good improvement. It looks like we're on the backside of the fourth wave. If you look at all the data, the last 2 weeks we've been seeing caseloads coming down. If you're looking at hospitalizations and you're looking at death rates, we know they lag by 15 to 30 days, they always have, and they're starting to plateau. So it looks like things are going to get better from here on out, on the fourth wave at least, and so that should be good for the consumers because the consumers do seem to worry about COVID when it gets really bad. If it's going to get better, we can start to go back to doing the things we love doing, going to restaurants, going to sporting events, going on holidays.
Are you seeing that good news translate into consumer data yet, or are we still lagging a bit there?
Yeah, that's a really good question because it's only just started to turn. So things like consumer confidence data in the indexes, it's still coming out quite negative because that's a little bit lagged. But some of the daily data that we're seeing, like restaurant bookings and flight bookings, it's starting to pick back up. So we are starting to see people seeing the better COVID data, feeling better about getting outside and getting back to life.
All right, Phil, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.